Okay, well, it's time now for a look at the day's top business news. And we're going to start with a warning from the International Monetary Fund that the global economy is facing what it calls a delicate moment. Well, to tell us just how delicate, we have Brian Quinn from our business desk. Brian.
That's right, Eve. A number of risks, including trade tensions, Brexit uncertainty, etc., contributing to the delicacy of this particular moment. Those risks leading the IMF to once again cut its predictions for global economic growth in 2019. The world economy is expected to grow at a pace of just 3.3% this year, rather than the 3.5% forecast in January. Both the Eurozone and the United States saw their respective outlooks scaled back as well, as the IMF warned that trade disputes should be settled in a spirit of cooperation or risk destabilizing the already bumpy trade trajectory.
So while the global economy continues to grow at a reasonable rate, and a global recession is not in the baseline projections, there are many downside risks. Tensions in trade policy could flare up again, with large disruptions to global supply chains. Growth in systemic countries, areas like the euro area and China could surprise on the downside. And the risks surrounding Brexit remain heightened.
Well, equities markets reacting to that forecast with some definite jitters on Wednesday. Asian indexes mostly in the red. The Nikkei in Tokyo down nearly 2/3% at the close, as shares in industrial automation giant Fanuc lost ground there. Chinese tech giant Tencent declining in Hong Kong. The Hang Seng down just under 1/3%. Shanghai Composite down around 1/4%. Samsung shares down in Seoul. The Kospi, however, just barely in the green ahead of the closing bell. Well, among the roadblocks to smooth global trade are Washington's recent threat to slap tariffs on $11 billion worth of EU goods in response to European subsidies for Airbus. On Tuesday, the EU moved to strengthen its relationship with China, with a joint statement between the two parties taking direct aim at Trump administration policies that have sparked trade conflicts around the world. Delano D'Souza has the details.
Placing divisions on trade aside and presenting a united front. After months of intense negotiations, Beijing signaled it was willing to open up its economy to companies from Europe. European firms will also no longer be forced to share their technological know-how to gain a foothold in China, a long-time demand from the bloc.
I also welcome the explicit agreement that there should be no forced transfer of technologies as a price for investment. As we work in the global level, we also want to move more together bilaterally. Our cooperation simply makes sense for both sides.
The pledges from Beijing come just weeks after the French president said there needed to be a coordinated European approach in dealing with China. And while both sides acknowledge they are in competition, they want to work in a multilateral environment.
The two sides reaffirmed their joint commitment to cooperate on WTO reform to ensure its continued relevance and allow it to address global trade challenges.
The declaration in Brussels comes as both the EU and China are engaged in trade negotiations with the United States. While Washington and Beijing are reportedly close to striking a deal, the EU has once again come into the crosshairs of the US president. On Monday, he threatened to slap tariffs on $11 billion of European exports to the United States.
Well, Uber is reportedly seeking to raise $10 billion in its public stock market debut next month, making it potentially one of the largest tech IPOs of all time. Reuters says the ride-hailing firm will publicly register for its IPO on Thursday, seeking to value the company at between $90 and $100 billion. Uber brought in $11.3 billion in revenue last year, but marked a $3.3 billion loss. The company has yet to ever turn a profit. Shares are expected to begin trading on Wall Street in early May. Next, with UK Prime Minister Theresa May set to ask Brussels for another Brexit delay, the US is maintaining its preparations for a no-deal Brexit. Treasury Secretary Steve Mnuchin telling lawmakers Tuesday that the threat of a hard Brexit remains very real and that he's coordinating with the Federal Reserve and other banking regulators to prepare for it. But he says if it comes to a hard Brexit, no amount of preparations will be enough to avoid market turbulence.
I met with both the Prime Minister as well as the the Chancellor of the Exchequer, Philip Hammond, and discussed it, as well as the head of the Bank of England. So we are very carefully monitoring these developments. I think U.S. financial institutions are prepared, but I think there could be some significant disruptions in the markets and in trade as a result of a hard Brexit.
Finally, for business, Airbnb in a delicate situation. The company has reversed a decision to remove listings located in Israeli settlements in the occupied West Bank. Last November, Airbnb said it would remove some 200 settler homes in the West Bank from its site, as most international observers view Israeli settlements in the Palestinian territories as a violation of international law. But lawsuits launched in Israel and the U.S. accusing Airbnb of discrimination against Jews were apparently enough to convince the company to change course. NGO Human Rights Watch lamented the latest decision. Airbnb, though, now says it will donate any profits from West Bank listings to humanitarian aid organizations. Trying to find a middle ground there, I suppose, Eve.
Okay, Brian, thanks a lot for that business update. Brian Quinn there with all our business news.